Hello everyone. Today we'll be doing one step further in holding company with a new adjustment. But before I take up with that new adjustment, I'll put in front of you two statements and I want to see your reaction. A mother sold chocolate to her own son and made a profit of 5 rupees. A father sold doll to his own daughter and made a profit of 200 rupees. Now you may be wondering, how can parents sell goods to their own children and earn profit out of that? And you are correct. Parents cannot make profit from their own children. And same is true between holding and subsidiary company. And it's vice versa also. Even if I would have told you that a son sold a piece of shirt to his own father and made a profit, or a daughter sold a sari to her own mother and made a profit out of it, then also it's not possible, because you cannot make profit from your own family members. And same is true between holding and subsidiary company also. If holding company has sold goods to subsidiary company and earned any profit from that, now when we do consolidation of financial statements, we cannot say that profit is earned. Like a parent cannot earn a profit from a child, or a child cannot earn a profit from a parent, same way holding cannot earn profit from subsidiary, or subsidiary cannot earn profit from holding company when we do the consolidation. So yes, in the books of holding company that profit will be appearing, but we have to eliminate that. That will see what effects are to be given. If holding company sells goods to subsidiary company, in holding company's books profit will be appearing. But when we do consolidation, we cannot say that we have earned profit from ourselves, so we have to eliminate that profit. Same way, if subsidiary company has sold goods to holding company and made a profit, we have to eliminate the same, because we cannot earn profit from ourselves. But if a father sells chocolate to his son and son further sells to his friend and earns profit from that, then can we say that the family earned profit or not? I repeat, father sold chocolate to his son, son further sold it to his friend and made a profit from that. Now can I say that the family has made the profit or not? Yes, now you can say that family has made profit. So if holding company has sold goods to subsidiary and subsidiary company has further sold goods to the customers in the market, then you can say that the family of holding and subsidiary company at the time of consolidation has made a profit, because the goods has gone to some third party, outside party, other than holding and subsidiary company. So today we take up with this second adjustment in the books of holding and subsidiary company, that is unrealized profits. Okay. First adjustment we had seen in the last lecture was intercompany adjustments, where we studied they are the adjustments or transactions between holding and subsidiary company, like intercompany bills, intercompany debtors and creditors, etc. Two effects what are to be given are minus from respective asset like bill receivable or debtors, and minus from respective liability like bills payable or creditors. And in case of intercompany contingent liability, it will have only single effect. You have to eliminate it from the contingent liability below the balance sheet. Single effect only. Now what is unrealized profit? As I said to you, if holding company sells goods to subsidiary company, then that profit is unrealized profit if those goods are not sold to outside customers. So what is unrealized profit? First, all of you write down. If goods are sold by holding company, that is H Limited, to subsidiary company, that is S Limited, or Vice versa. Vice versa means subsidiary company sells goods to holding company and the goods remain unsold with the latter company, and the goods remain unsold with the latter means the second company. Okay, first company is called former, like H is former, S is latter, and if else S sells to H, then S is former and H is latter. So, and the goods remain unsold with the latter company, then the profit on the goods remaining unsold, okay, the profit on the goods remaining unsold is called unrealized profit. Okay, I repeat, unrealized profit is only on those goods which remain unsold. So if H sells to S goods of rupees 10,000, from that S further sells to customers goods worth rupees 4,000, then whatever profit is on the goods of 4,000, that is realized, because that finally you have earned from some outside person. But the goods which remain with S Limited, out of 10,000, 4,000 of goods are sold, 6,000 remains with S Limited. The profit on that 6,000 of goods which remain unsold will be considered as unrealized profit, because when we make consolidated financial statements, then the goods are still within the family of H&S only. That profit is not yet realized from outside customers. It is unrealized profit. Okay, so once again, all of you understand the meaning of unrealized profit. Look at this meaning carefully, what I have made you write. If goods are sold by holding company to subsidiary company or vice versa, and the goods remain unsold with the latter company, then the profit on those goods remaining unsold is called unrealized profit. Okay, now as I discussed that you cannot make profit from yourself, so if there is a situation of this unrealized profit, what two effects will we give it at the time of consolidation? First effect, we will minus the unrealized profit from profit and loss account in the consolidated balance sheet on the liabilities side. Okay, you'll minus it from P&L account in consolidated balance sheet on liabilities side, means in the notes of reserves and surplus. We will subtract from P&L account. And second effect, you'll minus it from stock, that is inventories. Okay, you'll minus it from stock, that means inventories in consolidated balance sheet on asset side. So these two effects are to be given when we make the consolidated balance sheet. Whatever is the unrealized profit, profit which you have not earned from outside customers, but profit which holding earns from subsidiary or subsidiary earns from holding, and those goods remain unsold, means you have not realized that profit. The goods are within the same family. That amount of profit, unrealized profit, you'll minus from P&L account in consolidated balance sheet on liabilities side, and you'll minus from stock, that is inventories in consolidated balance sheet on asset side, because that profit is included in one company's P&L account and other company's stock. If holding sells goods to subsidiary, then that profit is included in profit and loss account of holding company, and in the form of stock of subsidiary company, that profit is included in the stock of subsidiary company also, because that stock for holding company would be at selling price, but for subsidiary company the same selling price will become the cost price. So that profit is hidden in the cost of that stock with subsidiary company. So what two effects we are supposed to give? Minus from P&L account on liabilities side and minus from stock on the asset side. Now what workings we will make for this unrealized profit, all of you understand it? So yesterday we studied 5 set of workings. Now 6 workings we will make if unrealized profit is also there in the question. And this would be the last working, 6th working. Okay. So what working we will make for this, understand it. First we will write in the working goods sold by H limited to S limited. Now if holding company sells goods to subsidiary company, it is called downstream sale. So first we have to identify this. Down means from parent to child, therefore downstream. Or you will have goods sold by subsidiary company to holding company, means from the child to the father. Then this kind of sale is called upstream sale. So in every question we'll have to identify, because it has some relevance. Amounts will differ. Profits calculation will differ if it is downstream sale, and it will be different if it is upstream sale. So first in the question we will identify, are the goods sold by holding company to subsidiary company, parent to child, that is downstream sale, or are the goods sold by subsidiary company to holding company, child to parent, that is upstream sale. We will write the value of those goods which are sold. Then we will find proportion or percentage of goods remaining unsold. Okay, we will find proportion or percentage of goods remaining unsold with the latter company, second company. Whatever is the percentage proportion of goods remaining unsold in the question will be given to you. After that, we will find what information of profit is given. Okay, whatever information of profit is given, percentage on selling price, percentage on cost price, something like that. Okay, some information will be given to you, percentage on selling price or percentage on cost price, etc. That information will write over here. And then we will find unrealized profit. How will we find unrealized profit? We'll see in detail when we solve the practical questions. Okay, but unrealized profit will find only on this unsold goods percentage and based on the percentage of selling price or cost price. From these two informations we'll be able to get unrealized profit. Now, what is this unrealized profit? If it is downstream sale, okay, this is important, be attentive. If it is downstream sale, then entire amount obtained is unrealized profit. Okay, entire amount obtained is unrealized profit. So if holding has sold the goods to subsidiary company, then this entire amount obtained is unrealized profit. But if it is upstream sale, upstream means subsidiary company has sold goods to holding company. Upstream sale, subsidiary company has sold goods to holding company, then H Limited's share will be unrealized profit. Means further we have to find holding company's share in that profit. Okay, understand this concept. If it is downstream sale, then holding is earning the profit by selling the goods to subsidiary. So if those goods are remaining unsold, then entire amount is unrealized. But if subsidiary has sold goods to holding company, then whatever profit is earned by subsidiary company, all the owners of subsidiary company, all the shareholders of subsidiary company have right in that. Even minority shareholders have right in that. So entire profit cannot be considered as unrealized profit. Only holding company's share in that profit will be considered as unrealized profit. So after we find this amount of unrealized profit, we have to further find holding company's share if it is a case of upstream sale. And if it is a case of downstream sale, then full amount will be considered as unrealized profit. So this is very important. Keep it in mind, everyone. If holding sells goods to subsidiary, then full amount is unrealized. But if subsidiary sells goods to holding company, then in this unrealized profit, we will further find holding company's share in the sale. Okay. So this working note 6 we will be making henceforth in all the further questions. I hope everyone is clear with that. Once again, what workings will we be making? First, we will find goods sold by holding company to subsidiary company or subsidiary to holding company. Holding to subsidiary would be considered as downstream sale. Subsidiary to holding will be considered as upstream sale. Then we'll find proportion of goods remaining unsold. And then we will find what information of profit is given in the question. Based on proportion of goods remaining unsold and information of profit, we will calculate unrealized profit. Now, if it is downstream sale, then entire amount we will minus from P&L account as well as from stock. And if it is upstream sale, then further in this amount we will find holding company's share, and that amount we will minus from P&L account as well as from stock. So this all we will have to verify in the question before we solve it. Let us take up with a question based on the concept of unrealized profit. Now look at question number 14. This will include the concept of unrealized profit also. So 6 workings will be done over here. Be attentive. H Limited acquired 15,000 shares in S Limited for 1,55,000, means rupees 1,55,000 on January 1, 2018. First of all, 15,000 shares is the quantity of shares acquired. All of you underline that. That will help us in getting degree of control. Rupees 1,55,000 is the amount of investment made. Okay, that will help us in getting cost of control. And 1/7/18, 1st July 18 is the date of acquisition. That will help us in getting time ratio. I repeat, H Limited acquired 15,000 shares in S Limited, will help us in obtaining working note 1 degree of control. In S Limited for rupees 1,55,000, that is the investment amount. That will help us in getting cost of control. Last working note 5. On July 1, 2018, that is date of acquisition. That will help us in getting time ratio. The balance sheet of two companies as on 31st March 2019 were as follows. Equity share capital of rupees 10 each. So 9 lakh divided by 10. 90,000 shares are there in H Limited. 2,50,000 divided by 10. 25,000 shares are in S Limited, and put cross on 2,50,000. And out of this 25,000, 15,000 are acquired by holding company, means remaining 10,000 are with minority shareholders. General reserve, holding company 1,60,000 will come in the balance sheet. Put cross on S Limited 40,000. That will get distributed between holding and minority in the form of pre and post acquisition reserves and profits. Same way, profit and loss account 80,000 will only come in consolidated balance sheet of holding company. Put cross on 25,000. Subsidiary companies share capital and reserves and surplus don't come in consolidated balance sheet. They come in the workings and get distributed between holding and minority shareholders. 6% debentures. So this would be note number 1, that is share capital, reserves and surplus, note number 2. Okay, this will come both in reserves and surplus. This will come in share capital. 6% debentures will come in long-term borrowings, note number 3. 2 lakhs plus 3 lakhs, 5 lakhs. Outstanding interest on 6% debentures would be other current liability. Okay, within current liabilities, outstanding interest will come in other current liabilities. We'll add the two amounts, 6,000 plus 9,000. Bills payable and creditors will come in trade payables. Okay. In asset side, plant and machinery would be tangible fixed assets. We'll add both the amounts, 7 lakh plus 150. Furniture also tangible fixed asset. Will add both the amounts, 3 lakh 6,000 and 3 lakh 79,000. Then investment in equity shares of S Limited 15,000 shares cross on 1,55,000. Here also it's given 1,55,000 in the first paragraph. It will not appear in the consolidated balance sheet. Okay, whatever is the investment of holding company in the shares of subsidiary company will not come in consolidated balance sheet. Stock will come in inventories. It will get added up. Trade debtors and bills receivable will come in trade receivables. It will get added up, both the amounts. And cash in bank will come in cash and cash equivalents. Now, additional information. General reserve appearing in the balance sheet of S Limited, which is this 40,000. Okay, general reserve appearing in the balance sheet of S Limited, 40,000, has remained unchanged since 31st March 18. 31st March 18 means since last year. So entire amount is pre-acquisition reserves only. It has remained unchanged since last year, means all the amount of reserve is of past years, and I as such made you write this in the notes yesterday, that if no information is given about the reserves, okay, here I made you write in general reserve. In reserves, if no information is given, then entire amount is to be taken as opening balance. And here it is specifically given that it has remained unchanged since 31st March 18, means the entire 40,000 is opening balance pre-acquisition reserve. Then profit earned by S Limited for the year ended 31st March 19 is 20,000. This is current year's profit. Okay, this is current year's profit. So normally opening balance is given and we find current year, but here out of 25,000, current year's profit is 20,000, means 5,000 would be the opening balance. So it's reverse. 20,000 is current year's profit in 25,000. That means opening balance would be remaining amount of 5,000. Now, H Limited sold goods to S Limited. Make it 2. H Limited sold goods to S Limited costing 8,000 for 10,000. So we can say that they have earned a profit of 2,000. Okay, H Limited sold goods to S Limited costing 8,000 for 10,000, means there is a profit of 2,000. And 25% of these goods remain unsold with S Limited. Just now we discussed. Unrealized profit means that profit which is on goods remaining unsold with the latter company. So here I told you that information of goods remaining unsold, proportion of goods remaining unsold will always be given. Here what is that information or proportion? 25%. 25% of goods are remaining unsold with S Limited. So entire 2,000 is not unrealized profit. 2,000's 25%, only 500 is unrealized profit, that is on unsold goods. Now, further holding company sold to subsidiary means parent is selling to child. So it's a downstream sale. Okay, this is important to identify. Holding company is selling to subsidiary means it is a downstream sale. Creditors of S Limited include 4,000 due to H Limited on account of these goods. Means some amount is purchased in cash and some on credit. Creditors include 4,000 due to H Limited. So we will minus from creditors as well as minus from debtors. Yesterday we studied intercompany adjustment. And keep this one thing again in mind. Unrealized profit will always come with intercompany adjustment. Because in unrealized profit, one company sells goods to another company. So if it is selling on credit, then further in the same adjustment, you'll generally also have intercompany debtors and creditors also. I repeat, if unrealized profit is there, then generally, not always necessary, if you purchase on cash, then it will not be there. But generally you would be selling on credit, then intercompany debtors and creditors will come attached with unrealized profit. Here, creditors of S Limited include 4,000 due to H Limited on account of these goods. So from creditors and debtors also we will minus this 4,000, put tick on them, intercompany adjustment. Out of bills payable issued by S Limited 15,000 are those bills which have been accepted in favor of H Limited. So what are the bills payable issued by S Limited? Total bills payable issued by S Limited are of 20,000. From that 20,000, 15,000 are accepted by H Limited. Now again, out of these H Limited had endorsed, means further given, by 31st March 2019, 8,000 worth of bills in favor of its creditors. So, how many bills are still remaining with holding company? Out of 15,000, 8,000 they have given to creditors, means 7,000 of bills are still remaining with holding company. That is intercompany adjustment. This 7,000 we will minus from bills payable as well as bills receivable. Keep this in mind. If you endorse the bill with the creditors or you discount the bills with the bank, then that becomes your outside liability, because that money you have to pay to outside person. But if you keep that bill with yourself, then it is intercompany. The settlement is to be done between holding and subsidiary company. There is no outside party involved. Here you have endorsed bill of 8,000, so that becomes your outside liability. I repeat, from 15,000, you have endorsed bill of 8,000, so that 8,000 becomes outside liability. That we have to show in the books. But how much is intercompany liability between holding and subsidiary company remaining of 7,000? That 7,000 intercompany liability we will minus from bills payable as well as bills receivable. So what you have to keep in mind, if any amount of bills are discounted with the bank or endorsed to creditors, then that amount becomes outside liability, that we don't have to minus from bills receivable and bills payable. The left out amount, which is between holding and subsidiary company, only that amount is intercompany, which you have to minus from bills receivable as well as bills payable. So discounted amount of bill and endorsed amount of bill is outside liability, that should not be subtracted in bill receivable and bills payable. Keep it in mind. Here out of 15,000 is 8,000 is endorsed, is outside liability. So remaining 7,000 only is intercompany, which we will minus from bills receivable and bills payable. Prepare consolidated balance sheet of H Limited and its subsidiary S Limited as on 31/3/19. Let us make the workings for this question. All of you understand it properly. Those 5 set of workings what we did yesterday, plus the new one will be unrealized profit 6th working note. Okay. First working will be degree of control. All of you should be writing along with me. Degree of control. This example what we are doing right now is done in current year in the college, and this is the first example done in college, means you all can understand that so far this is our 14th example. Almost 12 examples we have solved till yesterday, whereas in college they have straight away taken up this question itself as the first question in the chapter without going in detail with any other concepts. So we have done a lot of practice for the basic concepts, and now we have reached to this question, whereas this was the direct first question done in college. Now degree of control, how many shares are there of subsidiary company? 25,000. From that, how many are acquired by holding company? 15,000. So how much is minority interest? 10,000. So all of you write down 25,000 shares of holding company, S Limited, subsidiary company. From that, holding company has acquired 15,000 shares. Minority has 10,000 shares. If you cancel the zeros, 5 and 10 will remain. 5 into 3 is 15, 5 into 2 is 10. Both are divisible by 5. So 3 is to 2, 3 plus 2 is 5. 3 by 5 and 2 by 5 is the ratio of degree of control. Now what is the second working we have to make in the 5 set of automatic workings we studied yesterday? Time ratio. So in time ratio, first date is the date of year beginning. What is the balance sheet date? 31st March 19. So what would be the date of the year beginning? 1/4/18. Okay, balance sheet date is 31st March 19, means beginning of the year would be 1/4/18. And what is the date of acquisition of shares? See the first sentence. H Limited acquired 15,000 shares in S Limited for 1,55,000 on July 1, 2018. So what is the date of acquisition of shares? 1/7/18, 1st July 2018. Now April, May and June, 3 months is pre-acquisition period, and July to March, 9 months is post-acquisition period. 3 divided by 3, 1, 9 divided by 3, 3, both are divisible by 3. So 1:3, 1 plus 3, 4. 1/4 and 3/4 is the ratio of time. Now third working we make for profit and loss account and general reserve. So first, profit and loss account. Okay, you all must remember this automatic set of workings. In profit and loss account we have 3 columns: total, pre and post. Okay, total, pre and post. Now first we will start with opening balance. In this profit and loss account workings, first we will start with opening balance. Now see, in balance sheet, what is profit and loss account? 25,000. From that, what is the profit of current year as per adjustment to 20,000? Okay, 20,000 is the profit of current year ended 31st March 19. So how much is opening balance? Remaining 5,000. Out of 25,000, 20,000 are current year's profits, means opening balance would be 5,000. 25,000 minus 20,000, 5,000 would be opening balance. That will entirely go in pre-acquisition column. Now we have profit during the year. Normally we find profit during the year as closing minus opening, but here profit during the year is directly given in adjustment to as 20,000, and opening balance we found out, in fact, closing minus profit during the year. So profit during the year is directly given in adjustment to 20,000. Okay, this 20,000 we have to distribute in time ratio 1:3. So 20,000 into 1/4, 5,000, and 20,000 into 3/4, 15,000. Total pre-acquisition profits are 5,000 plus 5,000, 10,000, and post-acquisition profits are 15,000. Same calculations we will do for general reserve also. So first we start with opening balance. Now, as per adjustment 1, general reserve appearing in the balance sheet of S Limited has remained unchanged since 31st March 18, means entire amount of 40,000 is opening balance only. It has remained unchanged since last year. So entire 40,000 is opening balance, that will go in pre-acquisition column, and there is no transfer made to general reserve during the year. Okay, there is no transfer made to general reserve during the year, so no amount will be distributed in pre and post. Pre is entire amount of 40,000, and there are no amount of post acquisition reserves. Okay, similar working we had yesterday also for general reserve. Then fourth workings we will make for control chart A. 3 columns in control chart A will be total, holding company, that is H Limited, and minority interest, that is MI. Now here the amounts will be distributed in the ratio of degree of control, which is 3:2. All the amounts in this working will be distributed in the ratio of 3/5 and 2/5. Okay, 3 things come in this working. First, A, capital profits. Now capital profits will include 2 things. One, pre-acquisition profits, which we will get from working note 3. Okay, pre-acquisition profits we will get from working note 3. See here, what are pre-acquisition profits? 10,000. So this 10,000 will come over here. Same way, second part of capital profit is pre-acquisition reserves. That also we will get from working note 3. See in working note 3, what are pre-acquisition reserves? 40,000. So total capital profits are 10,000 plus 40,000, 50,000. This 50,000 we will distribute in the ratio of 3 by 5 and 2 by 5. So 50,000 into 3 by 5, 30,000, and 50,000 into 2 by 5, 20,000. Now what will you do with this 30,000? Minus in the next workings. Okay, I told you yesterday, first and third amount of holding company we will minus in the next workings. Then B is revenue profits. Now revenue profits, how we will find? Post acquisition profits. How will we get post acquisition profits? From working note 3 itself. See what are the post acquisition profits in working note 3? 15,000. Okay, 15,000. Then post acquisition reserves. Again we get it from working note 3. What are post acquisition reserves? All of you see here, nil. No amount of post acquisition reserves is there. So total also 15,000. Now 15,000 again we distribute in 3 by 5 and 2 by 5 ratio. So 15,000 into 3 by 5, 10,000. Sorry, 9,000. And 15,000 into 2 by 5, 6,000. And then third amount will be share capital. Now here we will take share capital. Keep in mind all figures in workings are to be taken from subsidiary company's balance sheet only. So share capital of S Limited. What is share capital of S Limited? We have 2,50,000. Okay, 2,50,000. That again we will distribute in the ratio of 3 by 5 and 2 by 5. So 2,50,000 into 3 by 5, 1,50,000, and 2,50,000 into 2 by 5, 1 lakh. Now what is the total of MI column? Will give us minority interest. Okay, total of MI column will give us minority interest. So 20,000 plus 6,000 plus 1 lakh. 1,26,000 is minority interest. Okay, 1,26,000 is minority interest. Now, what will we do with these two amounts? First amount of H Limited and last amount of H Limited we will minus in the next working control chart B, and this 9,000 we will add in P&L account in liabilities side in consolidated balance sheet. Okay, middle amount we have to add in P&L account in the balance sheet in the note of reserves and surplus, and first and third amount of H Limited column will get subtracted in the next workings. So next working, fifth workings, now we make control chart B, that is cost of control. Okay, control chart B, that is cost of control. Now how do we make this working of control chart B, cost of control? We start with investments of H Limited in the shares of S Limited. Okay, investments of H Limited in the shares of S Limited. Now What are the investments of H Limited in the shares of S Limited? Now, what are the investments of H Limited in the shares of S Limited? You can see on the asset side 1,55,000, and even in the first sentence in the question, H Limited acquired 15,000 shares in S Limited for 1,55,000. So what is investment of H Limited in the shares of S Limited? 1,55,000. Now from that we have to subtract two things. What two things? Just now as I discussed, this first amount and third amount. These two we have to minus here. Okay. So face value of shares held by holding company, that is H Limited. So we'll minus this amount of 1,50,000 here, which we have in the previous workings, and will further minus this amount of 30,000. Okay. What is this 30,000? What we have to subtract over here? Share of H Limited in capital profits of S Limited. Okay, share of H Limited in capital profits of S Limited. So as we discussed in control chart A, first and third amount you'll minus in the next working, that is control chart B. Now 1,50,000 plus 30,000, 1,80,000. If you minus from 1,55,000, then we get minus 25,000. Minus 25,000, negative amount comes, means it is capital reserve. Okay, if you get positive amount, it is goodwill. If you get negative amount, it is capital reserve. This will come in reserves and surplus in consolidated balance sheet. So I hope everyone is clear with the 5 automatic set of workings. Now what is the new working which we have to make over here? Unrealized profit. Okay, because of that adjustment of goods sold by one company to another company. Now what did I teach you today? How to make the workings of unrealized profit. First you'll write goods sold by holding to subsidiary or subsidiary to holding and identifies it downstream or upstream. So here if you see in the adjustments, it is clearly given in adjustment number 3 that H Limited sold goods to subsidiary. Father has sold to child. So that is downstream. That on goods sold by, okay, goods are sold by holding company, that is H Limited, to subsidiary company, that is S Limited, meaning it is in bracket, write down downstream sale. Okay, because it is downstream sale, full amount will become unrealized profit. And what are the goods sold? 10,000. Okay, we have seen here goods are sold by S Limited costing 8,000 for rupees 10,000. So goods sold are worth rupees 10,000. Then second information, what do we have to write is proportion of goods remaining unsold. Okay, so here what proportion of goods are remaining unsold in the adjustment? See here, you all can see that 25% of goods are remaining unsold with S Limited. So write down goods remaining unsold are 25%. Okay, goods remaining unsold are 25%. Then I told you some information of profit will be given to you, percentage on selling price, cost price, but here profit itself is directly given. 8,000 of goods sold for 10,000 means 2,000 is profit. So what is the profit earned on these goods? 10,000 selling price minus 8,000 cost price. The profit is 2,000. Now how do we find unrealized profit? Unrealized profit will be calculated only on unsold goods. So 2,000 is the total profit. From that 25% goods remain unsold. So unrealized profit is only 500 rupees. Since it is downstream sale, full 500 we will minus from P&L account on liabilities side, and we will minus from stock, that is inventories, on asset side. Okay, had it been upstream sale, then Further in this 500, we would have obtained holding company's share, which is 3 by 5. And that amount we would have subtracted from P&L account and stock. But because it is downstream sale, full amount of 500 we will minus from P&L account as well as minus from stock. So in the balance sheet, all of you put tick on P&L account so that you remember you to minus this amount, and put tick on stock so that you remember you to minus this amount in stock also. Okay. So now all of you make this format of consolidated balance sheet. Okay. Then don't forget to include minority interest in the same. So all of you make this entire format of consolidated balance sheet. Without fail, include minority interest in between shareholders funds and non-current liability. Yes, I hope everyone would have done the formats of balance sheet. Now let us make the notes to the format. So first note will be share capital. Authorized capital is not given, so all of you will write question mark and double underline in that. Okay. Authorized capital, every one of you write down question mark and double underline. Then all of you write down issued, subscribed and paid up capital. Now regarding issued, subscribed and paid up capital, holding company's amount will only come, which is 9 lakh, means 90,000 shares of 10 each. We have been looking this for so many questions now. Subsidiary company's amount gets cancelled. So 90,000 shares of rupees 10 each, all of you write down in the balance sheet. Okay, issued, subscribed and paid up capital will be 90,000 equity shares of rupees 10 each. Okay, so that would come to 9 lakhs. And total also 9 lakhs. Now reserves and surplus. First of all, in reserves and surplus, we'll have general reserve of holding company, which is 1,60,000 directly in outer column. Okay, general reserve will directly come in outer column only. So all of you write down general reserve 1,60,000 directly in outer column. Subsidiary companies reserve get cancelled. Then after general reserve, profit and loss account 80,000 will come in the inner column. So all of you write down profit and loss account 80,000 in inner column first. Okay, profit and loss account 80,000 in inner column. Now in that first we have to add. Okay, in that first we have to add from this control chart a middle amount. What we have mentioned here, plus in P&L account in balance sheet 9,000 rupees. This 9,000 we have to add in balance sheet in reserves and surplus. So what will we write for that? We'll mention share of H Limited in revenue profits of S Limited. Okay, share of H Limited in revenue profits of S Limited 9,000. And further, as per the last working note, we have to subtract unrealized profit. Okay, as per working note 6, we have obtained unrealized profit, which we have to minus here. Okay, see in the last working note, all of you, what is the unrealized profit which we have to minus from P&L account as well as stock? 500. So all of you write down 500, which we have to minus over here, so write it in bracket. Now 80,000 plus 9,000, 89,000 minus 500, 88,500. And 1,60,000 plus 88,500 would be 1,60,000 plus 88, so 2,48,500. Okay, this is the amount of reserves and surplus. Then after reserves and surplus, what is the next thing we have in the balance sheet? 6% debentures will come in long-term borrowings. 2 lakhs plus 3 lakhs, 5 lakhs, and there is no intercompany liability in that. Simply 2 lakhs plus 3 lakhs, 5 lakhs. So all of it down in long-term borrowings. 6% debentures. H Limited 2 lakhs and 3 lakhs or 3 lakhs and 2 lakhs? 2 lakhs and 3 lakhs. H Limited 2 lakhs. S Limited 3 lakhs. Total 5 lakhs. And final total also 5 lakhs. Then trade payables we will have. Now in trade payables, what all things will we have? First, creditors. Let us take creditors. Creditors are 50,000 and 30,000, and tick is there means there is intercompany liability also. So 50,000 plus 30,000, and from adjustment 3 minus this 4,000, okay, is intercompany liability. 50,000, 30,000 minus 4,000. So all of it write down. Trade payables, creditors, H Limited 50,000, S Limited 30,000 less intercompany adjustment. Okay, intercompany adjustment 4,000 that we have to minus. So outer column 50 plus 30, 80 minus 4, 76,000. Then after creditors we'll have bills payable. So bills payable are 40,000 of H Limited, 20,000 of S Limited, 60,000, and from that 60,000, as per the last adjustment, 7,000 is what is intercompany adjustment. As we discussed, 8,000 becomes outside liability because it is endorsed. So 7,000 is intercompany liability. Okay, 40 plus 20 minus 7,000. Okay, 40,000 plus 20,000 minus 7,000. So all of it are down. Bills payable, in that H Limited 40,000, then S Limited 20,000. From that we'll subtract intercompany adjustment 7,000. So outer column 40 plus 20, 60 minus 7, 53,000. And then total amount would be 76 plus 53,000. So 1,29,000. Okay. Then in other current liabilities, we will have that outstanding interest on debentures. 6,000 of H and 9,000 of S, so 15,000, 6,000 and 9,000. So in other current liabilities, we will have outstanding interest on debentures, H Limited 6,000, okay, 6,000 and 9,000, that is 15,000. 6,000, then S Limited 9,000, S Limited 9,000, total 15,000. And below that panel total also 15,000. Then tangible fixed assets we have. First, plant and machinery. 7 lakhs plus 1,50,000. Okay, one more thing. In reserves and surplus, we forgot to include capital reserve. Without fail, you all must include that capital reserve also. Okay, that is from the working note 5. Instead of goodwill, we had capital reserve. So all of you write down capital reserve from working note 5. What amount do we get? 25,000. This capital reserve will come in reserves and surplus. 25,000. So total will change. 1,60,000 plus 88, 248, 500 plus 25,000. So 248, 58, 68, 73, 500. Okay, 2,73,500. Now tangible fixed assets. First we have plant and machinery. Now what is the amount of plant and machinery? 7 lakhs plus 1,50,000, 8,50,000. So H Limited 7 lakhs, S Limited 8,50,000, 1,50,000, total 8,50,000. Then after plant and machinery, which other tangible assets do we have in the balance sheet? Furniture. Okay, furniture is given as 3,06,000 and 3,79,000. 3,06,000 plus 3,79,000 furniture. So all of you write down furniture. H Limited 3,06,000. H Limited 3,06,000. S Limited 3,79,000. Total 6,85,000. And final total 8 plus 6, 14. So 15,35,000. Okay. Then after that we'll have inventories. Inventories means stock. So in stock, what all things do we have? See here in the balance sheet. 1,50,000. And from that 1,50,000 we have put tick, means we have to minus this unrealized profit of 500. Okay, 1 lakh plus 50,000 minus 500. So all of you write down inventories, that is stock. H Limited 1 lakh. S Limited 50,000. And further we will minus unrealized profit, that is 500, which we get from the working note 6. So 1,49,500. Okay, 1,49,500. And total also 1,49,500. Lastly, trade receivables means debtors and bills receivable. So in that first debtors we will write 60,000 plus 35,000, 95,000, from which we will minus as per adjustment 3 this 4,000. Okay, 60, 35 and 4,000. So first all of you write down debtors. H Limited 60,000. S Limited 35,000 minus intercompany adjustment will minus 4,000. So outer column 60 plus 35, 95 minus 4, 91,000. Okay, outer column we will get 91,000. Then bills receivable. After debtors we will have bills receivable. H Limited, S Limited, and here also in bills receivable we have intercompany adjustment. So how much are bills receivable of H and S Limited? 25,000 plus 20,000, 45,000, and 7,000 is intercompany adjustment. Okay, 25,000, 20,000 and 7,000. So all of you write down 25,000 H Limited, 20,000 S Limited, minus 7,000 intercompany adjustment. So 25 plus 20, 45. 45 minus 7, 38,000. And final total 91,000 plus 38,000. So 1,29,000. Okay. So these are the amount of trade receivables. No other item remains in the balance sheet. Do we have cash and cash equivalents? Yes, cash in bank is also there. So cash and cash equivalents, simply 90 plus 40, that is 1,30,000. Okay. Cash and cash equivalents, we will have the last note. So note number 9. Cash and cash equivalents. In that, cash and bank balance. Okay, first H Limited. What amounts are there? 90 plus 40, 1,30,000. So H Limited 90,000. S Limited 40,000. And total 1,30,000. And final total also 1,30,000. Okay, so this is how we make the consolidated balance sheets notes. Now let us put these figures in the consolidated balance sheet. Okay, shareholders funds, share capital reserve and reserves and surplus as per note 1 and 2. Share capital is, you all can see, 9 lakhs and reserves and surplus is 2,73,500. So share capital 9 lakhs, reserves and surplus 2,73,500. Total 9 lakhs plus 2,73,500, 11,73,500. Okay. Then after reserves and surplus, minority interest will directly take from working note 4. Okay. So what is minority interest as per working note 4? You all see here. 1,26,000. Minority interest, what we get in working note 4 is 1,26,000. So all of you directly write down 1,26,000. Then long-term borrowings, what we get in working note 3 is 5 lakhs. You all can see here, long-term borrowings are 5 lakhs. Okay, so working note 3, long-term borrowings 5 lakhs. Total also outer column 5 lakhs. No other items are there. Then current liabilities, from short-term borrowings we don't have. Trade payables we have in note number 4 and other current liabilities we have in note number 5. So trade payables are 1,29,000 and other current liabilities are 15,000. Okay, 1,29,000 trade payables and 15,000 other current liabilities. So we'll get 1,29,000 plus 15,000, 1,44,000. Now final total 11,73,000 plus 1,26,000 plus 5 lakhs plus 1,44,000 will get 19,43,000. Okay, 19,43,000. Now, fixed assets, tangible we have in note number 6. Intangible and other items we don't have. So directly in fixed assets we'll have tangible fixed assets from note number 6, that is 15,35,000. Okay, other items we don't have in fixed assets, non-current assets 15,35,000. Outer column also 15,35,000. Other items we don't have. Then in current assets, what we have is inventories in note number 7, trade receivables in note number 8, cash and cash equivalents in note number 9. So all of you see here, inventories in note number 7 are 1,49,500. Then trade receivables in note number 8 are 1,29,000. 1,29,000. Then cash and cash equivalents in the last note are 1,30,000. So cash and cash equivalents 1,30,000. Total in the outer column we will get 1,49,500 plus 1,29,000 plus 1,30,000, 4,08,500. Okay, 4,08,500, and final total 4,08,500 plus 15,35,000. We will get 19,43,000. 19,43,500. Even in liabilities, let us verify it once again. 11,73,500 plus 1,26,000 plus 5 lakhs plus 1,44,000. It is coming to 19,43,500 only. That was my mistake. Make the correction. So both the sides total coming to 19,43,500. Now this is how we have to solve question based on including unrealized profit. Now today we will cover only one question in this lecture, question number 14. Question number 13 we will cover in the next lecture exclusively separately, because again 13th question entirely I will have to solve on the screen. So right now in today's lecture we cover only one question, that is question number 14, and you all refer to this video thoroughly once again, understand it once again and resolve it properly. 13th question, similar question, practice with same 5 workings plus unrealized profit 6 working. Will practice more in question 13 tomorrow, so that you get more confident with this particular chapter. So this question 14 itself, every one of you revise it thoroughly well. Okay, that will be all in the current lecture. Bye everyone, take care, see you in the next lecture.